I talk to people, Karleigh, all the time that are actually pulling the equity out of their current home to buy their next home.
Yeah.
And like you said, they're going to turn that current home into a rental.
Yeah.
With all that equity, you can pull it out to level up. You can pull it out to renovate the home. You can pull it out to help send your kids to college or pay for a wedding even.
Exactly.
That is your equity. It's like your personal bank account, really.
Yeah, so you are paying the mortgage, but in a sense, you're paying yourself back in equity. So hey y'all, it's Karleigh, your 757 Motive Agent with Assets Real Estate Team, and today we are here with Liz Copeland.
Hi, I'm Liz Copeland, Sales Manager at Cross Country Mortgage, and we are at Moxie in Virginia Beach, which we'd like to give you a big shout out for letting us use this venue. So Karleigh, why are we here today?
Well, that's a great question. Today we're actually going to be discussing whether it is a great time to purchase a home or not in today's market, just based off of interest rates going up and down. Are they going to go down? Are they going to keep rising? Sellers coming into the market because it's the springtime, it's the best time to sell your home. Are we going to get more buyers coming in? Are you trying to save thousands of dollars, or do you have thousands of dollars to come out of your pocket? So just so many different things that you want to take into account for whether it's the right time to purchase a home for you.
Karleigh, those are such compelling questions, and so many people today are asking, is today, right now, here in 2025, this spring market, is this the right time to buy a home? And so I think that's the tip of everyone's mind right now. People are a little nervous and a little jittery because you turn on the news and rates are up a little, rates are down a little, rates are up a little, rates are down a little. But as a lender, what I will tell you is that for our buyers who are not trying to come out thousands of dollars on top of what they'd already planned to spend to buy a house, now's a great time to buy a house.
I agree.
I mean, when interest rates were right in the sixes right now, when rates go into the fives and we are in the mid to low fives, what's going to happen is you are going to have 5 million buyers enter this market. And you know what that means?
Yeah.
That means 2020 all over again, right? So you're going to see bidding wars. You're going to see appraisal gap guarantees. You're going to see people waiving home inspections. And as an agent, how important that home inspection is.
It definitely is. It's super important because you want to make sure that you're walking into a home that is not only a good quality home, but it's not going to cost you thousands of dollars in the end. You want to enter a market where we can negotiate repairs. We can ask for the seller to do the things to your home before you move in, and then it causes problems down the road. Not only that, but like Liz said, if you want to save thousands and thousands of dollars, the way to do that is enter a market where you can ask the seller to pay for things, because that's how you're going to save thousands of dollars, on top of grants, on top of just different options that are out there, different things that you can take advantage of in terms of the flexibility of the market that we have now, versus if you wait until interest rates drop, and then now you're competing with tons and tons of other buyers and you're walking into a home with negative equity.
Yeah, I agree. I mean, you've got buyers out here that are 3% down, 3.5% down, 100% financing, 5% down, and that's what they have to put into the purchase of their home. And what they don't understand is, once you get into a market where rates are in the fives, and we've got 5 million other buyers out here trying to buy a house, and they've got 20% down, and plus that 20% down, they can throw another $25,000 at an appraisal gap guarantee, then our buyers that are our 100% financing, our 3%, our 5% down buyers, they're going to get priced out of the market. It happened in 2020, and it is going to happen again. Our buyers, if we're speaking to you and you are our 100% financing, 3%, 5%, 10% down buyer, you don't want to waive a home inspection, you don't want to have to an appraisal gap that you're going to come out of pocket for, now's the time for you to buy, because when everybody else is fighting over a house, all you have to do is sit back and refinance
Yep.
to a lower rate to get that monthly mortgage payment down.
And when she says appraisal gap, what she means is, say you find a home for $350,000, right? At the end of the day, you're only going to get a loan amount for what the home appraises for.
Correct.
So with an appraisal gap, you might say, okay, I'm going to offer $350,000, and this is what I'm willing to go over out of pocket if it appraises lower. When that happens, if it appraises lower and you're coming out of pocket, let's just say $10,000, well, now you're technically walking into a home with negative $10,000 in equity in it because you're willing to come out of pocket for more than what the home is actually worth. And versus if you were to purchase now, save money, and honestly, the interest rate is not going to be that big of a difference in a monthly payment in terms of like hundreds and hundreds of dollars.
Right.
But if you purchase now, and then when everybody floods the market, when interest rates drop, you sit in your home that you did not have to fight that hard for, and you get to refinance like Liz said, and
Correct.
get that interest rate that you really wanted, but with the home that you love and the home that you were able to save thousands and thousands of dollars on. And at this point, you're going to have tons of equity in your home.
And when you talk about interest rates, so everybody talks about interest rates today, but if you continue to rent, what you have to understand is that you're paying 100% interest, right? And there are no rent caps in the state of Virginia, which means your rent can go up every year and there's no limit on how high your landlord is raising that rent.
Exactly.
So the fact that you're living in an uncertain circumstance from year to year, and the fact that you're paying 100% interest when you're renting, that should really put a fire under you to call Karleigh and call me and let us see if we can make you a homeowner.
Exactly, because I tell people all the time, I'm like, you're either going to be paying your own mortgage down or somebody else's mortgage down. If you're able to purchase right now, please just take advantage of that, because honestly, there's no telling where the market's gonna go.
Right. And house prices, I mean, and this is my belief, and I've done a lot of research on this, but house prices, I think, are going to continue to rise because people talk about inflation, they talk about rates, they talk about the market. But the thing is that people miss a lot of times is that there is a supply and demand issue, right? There is not enough homes for the amount of people that we have in this country. So supply and demand is going to keep that upward pressure on house prices.
Definitely. So if prices are going to rise, not only is prices going to rise, but when interest rates drop, like we said, again, you're now coming out even more money out of pocket above the prices rising versus buying now. And as these prices rise and as you pay your mortgage down, your equity is going up. So that is honestly why you should purchase now.
Correct. I mean, if you are buying now and you're doing 100% financing, let's say you're a VA loan, or you're 3.5 down at FHA, or 3 to 10% down on a conventional, when you are ready to refinance and the market is going bananas with 5 million buyers and bidding wars, you are going to be so stunned on how much equity that you are going to see in your home. And that again goes back to the supply and demand. There's just not enough homes out here for people. And so really, if you're looking at long-term wealth, if you're looking at a safe investment, if you're looking at creating generational wealth, buying a house, putting your money in the ground is really where it's at right now.
It definitely is. And what's to say you can't live in that home for 2 years and then now you're the landlord and now somebody's paying you 100% interest for the rent that you're charging them, which is obviously going to be more than your mortgage payment that you're paying. And so not only are they paying your mortgage payment down by renting out your house, but you're getting that passive income in your pocket. You can pull that equity out and purchase another home and keep doing that and repeating the process. Like Liz said, building generational wealth.
Yes, and it's so important when you think about people who bought houses in 2020. Look at all the equity they're sitting on right now.
So much equity.
I mean, I don't think in 2020 that we even realized how much equity people were going to gain. And I talk to people, Karleigh, all the time that are actually pulling the equity out of their current home to buy their next home.
Yeah.
And like you said, they're going to turn that current home into a rental.
Yeah.
With all that equity, you can pull it out to level up. You can pull it out to renovate the home. You can pull it out to help send your kids to college or pay for a wedding even.
Exactly.
That is your equity. It's
Your
like
equity.
your personal bank account, really.
Yeah, so you are paying the mortgage, but in a sense, you're paying yourself back in equity. So it's kind of like an emergency fund in a sense, you
Right.
know. Run into an emergency, you have that money to fall back on. On top of, a lot of people on my social media are younger, they're in their 20s, and I just can't stress it to you guys enough. This is the time that you want to buy, because who wants to work until they're 60? Who?
Not me.
I don't want to.
No.
So why not purchase in your 20s? Repeat the process every 2 years using your equity. By the time you're 40, you can have 10 to 20 rental properties generating passive income. They're all paying down your mortgages, and now you can retire at 40.
Exactly. And you know about multifamilies, right?
Yep.
You can actually buy a multifamily unit.
Yep.
Fannie Mae last year came out and changed it from, if you don't have to put 20% down anymore to do that.
Oh, wow.
So with under Fannie Mae conventional loan, you can put 5% down on a duplex, live in one half,
Yep.
rent the other half out. So literally you're making money while you sleep.
Exactly. Literally while you're sleeping.
While you're
in the same
sleeping.
building. So seriously, we can't stress it enough why it's so beneficial to just not wait. So if you have all your ducks in order, let me help you purchase a home. Let Liz help you.
Yes.
We can work as a team to save you thousands and thousands of dollars.
100%. I mean, Karleigh's right. This has been such a great time for people to invest in real estate. And honestly, we are not dream breakers. We are dream makers.
Exactly.
And we really want to help you make your financial dreams come true.
Yeah.
And we wouldn't guide you wrong if it wasn't a good time to buy. But I definitely feel like right now is really the point where people should be coming out and buying a home. I also want to point out that there's a lot of people out there that are in high interest debt, right? Credit card debt, they've taken out personal loans. And if you are sitting on a lot of debt, if you own a home right now, consider pulling some of that equity out of your home, right, to pay off some of that debt, to get yourself in a financial position to level up and buy your next home.
Definitely. And if you have terrible credit and you don't have a home with equity in it, we have resources and people that can fix your credit for you. So
100%. All it takes is for us to do a credit pull and to look at everything to get you on the right path. And that's what Karleigh and I want to do. We want to get you on the right path. We want to look at what you have in terms of credit, what you have in terms of income, and what you have in terms of assets.
Yep.
Those are the big three. And I always say it's just a conversation. Takes you about 10 minutes to fill out the application link. And then Karleigh and I are right on it trying to help your real estate dreams come true.
Yep. And a lot of people, Liz, the biggest thing that scares them the most is, oh my gosh, they're going to pull my credit.
Yeah.
They're going to ding my credit. And I tell people it's not as harsh as you think it is. So can you explain to them since she is a lender, y'all, I want y'all to hear it from a lender. Explain how it is not as harsh as they think it is.
Right. One credit pull is not going to kill your credit score. You might see a small dip, a couple point dip, and then as long as you don't have another credit hit, that credit score is going to rebound. What kills your credit is, on Black Friday, Karleigh, we like to go shopping, and you go from one store to the next, and you have multiple stores offering you a card and saying, hey, you open up our card, you get 10% off, and you get a credit hit here, and a credit hit there, and a credit hit there, and a credit hit there, and by the end of the day, you've had 6 credit hits, and then 2 weeks later, you decide to get a new car, and you get a bunch of credit hits for a new car. It's the combination of credit hits that really kill your score. Having one credit hit to look at your credit to buy a mortgage, that one credit hit is not going to hurt your score.
Yep.
It's the combination of multiple credit hits in a short period of time that will drive your score down. So when you go shopping on Black Friday, Karleigh, I don't want you walking out of there with 4 different credit cards.
Every time they always ask me, and I'm like, no, I'm good. I got enough.
Right.
I don't need no more credit cards.
Exactly. Exactly. So it's
Yep.
scary for people for sure. And I always say it's better to know. I have people to say to me that they're just scared to take the first step. They're scared to know what their credit is. They're scared to know what's on their credit report. But the thing is, you have to put fear aside so that you can move forward
Definitely.
and really get something for you and your family.
So Liz, I just want to wrap it up with a few, two more questions.
Yeah.
I think it would be very beneficial for us to give the audience tips for first-time home buyers that are looking to start the process in today's market. And I want to give them a lender perspective and a real estate agent professional's perspective. So let's start with you. What tips do you give them when it comes to purchasing their home?
Absolutely. I think that my initial buyer consult, I always tell my buyers to be brutally honest with me with everything. Talk to me about things that have happened on your credit that you're aware of. Talk to me about your job. If you're planning to leave your job in the next 2 weeks, please tell me that now. Please be honest with your lender, because I'm here to find a tailored solution to fit your needs. So I would say at first with me starts with a really honest conversation. And again, we're going to go over your income, credit, and assets. So we start with a conversation, and I'm here for you to ask me every single question you have. So, if you come into our buyer's consult with a list of questions, that's amazing too. And then obviously with me, the next step would be then to fill out the application, which should take about 10 minutes. After that, I'll process the application and we'll go over it. And again, we'll look to find a loan solution that's really tailored to your specific needs as a buyer in today's market.
I like that. I think that's great. For me, I would say listen to the team that you have chose to help you on this journey. The team is going to be your agent and the lender. And when the lender and the agent work together, we can make magical things happen for you. So once you get through to talking with Liz or your lender or whoever you decide to choose, because at the end of the day, it's up to you. The next step is to get with your agent. And tips for that, I would say ask tons of questions. Tons of questions,
yeah.
But also be willing to listen and take in information as well, because there might be certain questions that you might not think to ask that the agent is going to give you the information of. And also understanding the process, understanding that you're working with a great agent, somebody that's going to have your best interest, because there are agents out there that will try to get over on you. So you want to make sure you're doing your due diligence and finding the right agent. We just want to make sure that you're saving as much money as possible. So I'm an agent that's going to tell you stories on how I was able to save my last buyers thousands and thousands of dollars. I'm an agent that's going to talk to you from experience, that's going to share all the information you need, but understand that I'm going to have to say it multiple times throughout the transaction because it's just so much, and I want it to be the least amount of stress for you. Don't go out and buy a car before you close on a home.
Correct.
Don't go out and make no huge purchases while you're in the process of looking for a home.
Don't quit your job.
Don't quit your job.
Do not quit your job, please.
Please. And honestly, set out your expectations up front. What are your needs? What are your wants? What is the most important thing to you? And understand that you might not get all of that in your home. You might not get all of it. You want to focus on what's most important. So if saving tons of money is most important, well, I'm not going to waste your time looking at houses with sellers that don't have a lot of equity in their home, because they're not going to be willing to give you that money. So now we need to look at homes that are going to have more equity in them. Or, if say money's not the problem and you want a certain area or a certain school zone, is that more important to you? Okay, so if you're looking for a good school zone, you tell me what school zones you like or what areas you like and what areas you don't like, because I cannot steer you in any direction. I cannot say, oh, this is a bad neighborhood, this is a bad school zone. You have to do your due diligence to find what is good to you and what's bad to you. And then I will sit there and I will generate a list of homes for us to go see that fit all of that. I don't want to waste your time taking you to see homes that just really don't fit what you need. So it's super important to figure out what is the most important thing about your home to you.
And that ties in with the mortgage as well, right? You're going to have a budget and you're going to tell me, hey, my payment goal is between X and Y.
Yep.
And it's very important that the homes that Karleigh is pulling for you to go look at are in alignment with how much you can afford and are in alignment with what you want your monthly payment goal to be. And that's where that lending piece really ties in. So if you're telling Karleigh you want to look at $600,000 homes, but you don't want a mortgage payment over $2,000 a month, then we have a disconnect. And we need to work together with Karleigh to come up with, okay, we want a $2,000 mortgage payment. We want to look at $600,000 homes. We've only got 5% to put down. That doesn't sync. So Karleigh and I have to get creative and find a solution to help meet all your needs with your payment goal, with what you're budgeted for, but also with the house and the area that you want.
And that comes to us working as a team. That's why it's super important to have a great lender and agent that can work together as a team, not an agent and using your bank, or because banks make it a lot more difficult, but that we can get into that in a whole nother video.
That's another video.
That's a whole other video. For example, say you're pre-approved for $350. Well, we're not going to go look at $350,000 condos with a $300 a month fee, because now you're out of your pre-approval range. Say there's HOA fees or condo fees of $300. I typically like to say for every $100 you want to knock $10,000 off of your pre-approval amount. Would you agree with that?
Yeah, I agree. I usually tell people it's anywhere from I usually say anywhere from $7 to $8 per every 1,000 is what I typically tell people. So you're right. If you're maxed at $350 and we can't budge over $350, we can't be running around looking at condos that are $350 with a $300 HOA fee. We've got to trim back the pre-approvals who allow for that HOA fee. So that's a really good point, especially in this area. There's a lot of condos.
Yeah, so if you're approved at $350 and they're $300, maybe let's look at condos that are $320 or $310 and have a $300, because then it makes it up to that $350, because at the end of the day, it's what you're comfortable paying monthly.
Absolutely. Payment goal is so key.
Well, Liz, thank you so much for meeting with me today. That was just such a great conversation. I think we were able to give the audience tons of information. To be honest, I feel like we can still go on even more, but we can save that for another video.
Yes, 100%. It was great meeting with you today, Karleigh.
It was great meeting with you as well. If you're looking to purchase a home in today's market, let's strategize and get together to understand your goals, understand your timeline, your motivation, and let's get you in your home today. If you would like to learn more about real estate, make sure to watch the next video.